Hello everyone, my name is Dan and I have a super exciting video for you all today because in this one I will share with you what I think are the only 3 ICT concepts you'll ever need in order for you to get funded or profitably trade your current trading account. Okay, so if that sounds interesting, let's get right into it. All right, so I will go over the 3 concepts that I consider to be the most important ones, the concepts that I use on a daily basis, and if mastered, I do think that these should be the only concepts you'll ever need. Okay, so we'll get right into them. We'll briefly go over each and every single one of these concepts, and after that, I will also go over a trade example where I used all of these concepts, a trade that I sent in my SMC group as well. So make sure to stick till the end to get the most value out of this video. So let's start off with the first concept. The first one is liquidity, understanding liquidity. This was a massive step forward for me because when I first started trading, I used to trade using the retail supply and not supply, sorry, support and resistance trading method, which of course can be profitable. But I did find that I was getting stopped out pretty often. Okay, why? Because I wasn't understanding liquidity. Okay, I wasn't understanding liquidity. I wasn't understanding equal highs and equal lows. I didn't understand that there's liquidity sitting above them, and that price usually likes to grab that liquidity to sweep it before heading lower. Okay, I didn't understand this. I didn't understand that there was liquidity sitting right above these 2 highs here. Okay, this is something that took me a while to understand. Same with the opposite, with the sell side liquidity. Okay, I didn't understand it. I didn't understand that there's liquidity sitting above below this low, and that price will tend to go below it, sweep it, and then head higher. Okay, but once I understood this metric, this concept, I started applying it, and my win rate started to be a lot better. My win rate started to be bigger, and I didn't find myself trapped into these fake outs anymore. Okay, because I was understanding that okay, there's liquidity sitting above a high or below a low, and I was waiting for the liquidity sweep, either to the down or to the upside. So for me, this is the first ICT concept that is very important for you to understand. Understanding liquidity. Okay, where is liquidity sitting currently in the markets? And of course, I do have a specific video for that on my channel. Feel free to check it out after you go through this whole video, because like I said in this video, I will briefly go over the concepts and then I will go over a trade example. Okay, next up, the second step is displacement, understanding market structure. Okay, understanding breaks of structure to the up or to the downside. That's pretty much what this displacement means. Okay, so basically the next step after we identified the liquidity sweep is to identify the displacement to the up or to the downside. In this case, we have a displacement to the upside. We can mark it like this and type in BOS as a break of structure. And here we have a displacement to the downside. So once again, we can mark it as a BOS. All right, right here. So firstly, we have the liquidity sweep, understanding where liquidity was swept. And then we have a displacement either to the up or downside. Okay, so these are the 2 steps. And now we can see that we formed a shift in momentum. Usually when we see this, the market is doing a shift in momentum. And that's exactly what we want to see. All right. And now the third step is fair value gaps. The third concept, sorry, is fair value gaps. Understanding imbalance, okay, and also identifying unmitigated supply or demand levels. All right, because if you're able to identify fair value gap or imbalance, you're automatically able to identify unmitigated supply and demand levels. All right. So after this, okay, after we have the liquidity sweep and displacement, we want to identify fair value gap or a unmitigated supply or demand level in our area of interest, okay, which is our discounted or our premium area, okay. In this case, it is our premium area because we have a displacement to the downside, and in this case, it is the discounted area because we have a displacement to the upside. All right. So if we know that we have a unmitigated demand level here or a unmitigated supply level here, we know that we had a aggressive displacement. That is what we need to see. If we don't have a aggressive displacement, then our trade setup won't be valid, and that's exactly why it is so crucial to understand imbalance, to know how to identify imbalance or, of course, fair value gaps, because ultimately, if you know how to identify fair value gaps, you'll know how to identify unmitigated supply and demand levels. And me personally, I always look to identify unmitigated supply or demand levels, okay, levels where I see imbalance on, because if I see that, I know that I had a aggressive displacement. All right, and like I said, that is a must. If I don't see that, then I am not considering that setup. And these are legit the three concepts I personally use on a day-to-day basis, and these are the concepts I think you'll ever need. Okay, so that being said, let's quickly jump into the trade example. All right, but before we do, feel free to join my SMC trading group. It is the first link down below. Feel free to join it if you want to see the trades I am taking every single day. All right, so now let's discuss about this trade that I sent yesterday in my SMC group. Okay, this was exactly the time when I said to myself that, okay, I see a potential trade on Euro USD on the M15. Okay, and of course I will use the bar replay so that you can see in real time what was going on through my head. All right, so right here, first thing that we need to look for is a liquidity sweep, right? We already know that. Where do we have a liquidity sweep here? Well, it's very clear to see that we have a liquidity sweep right here. Okay, below this low, price went higher, then went lower, swept liquidity with this wick, and then the second step, we want to see that displacement to the upside. And we do have it. Okay, we have a break of structure right here to the upside. And then the third step would be for us to identify a fair value gap, identify that imbalance, and ultimately identifying the unmitigated demand level. All right, so if we zoom in closely, we have a clear fair value gap or imbalance right here. Okay, so this tells me that we had a aggressive displacement. It is also in my discounted area. Okay, so it also ticks that box. And then I wanted to identify the unmitigated demand level, which was this one right here. Okay, and that was it. That was it. This is how I applied the three concepts we've just discussed about, right? Based on these three concepts, I took this setup and I sent it in my SMC group. I think this was the entry right here, around here. The stop loss was right about here, and then the last take profit was at 1-to-3 risk to reward ratio. Okay, and of course I'll also attach a picture on the screen right now to see exactly when I sent this trade in my group. And now we can play the price and see how this trade played out. So once again, we used the three concepts we just discussed about: liquidity, displacement, and understanding imbalance or fair value gap. All right, so now let's play the price and see what happens. Okay, we have a tap in there, pretty nice tap in. Then we go back at break even. We face some drawdown, but then check this out. We have a beautiful rejection, some nice bullish momentum, and boom, we smashed all the take profits right here. Okay, so this was a very beautiful trade. And of course, I'll also attach a picture on the screen right now to see exactly when I updated this trade. And yeah, this was exactly the trade that I sent yesterday, because as we can see, this is the real time, 9th of November, Thursday. And yesterday I sent this trade in my SMC group using the exact concepts we've just discussed about. All right. So yeah, feel free to let me know if there's any questions on this topic. Make sure you are subscribed to not miss out and on future content like this. And feel free to leave me some feedbacks down below. They can be video ideas, pretty much whatever you want. Feel free to drop them down below. I always make sure to check out the comments. All right. And lastly, I would highly recommend you all to watch the individual videos I have on my channel on liquidity, market structure, and also on fair value gaps or imbalance. Okay. Because if you don't understand these concepts fully yet, those videos will definitely help you understand them. All right, so I will definitely recommend you to go ahead and watch those videos, and after that, start testing it. Start testing, start back testing. Use the bar replay. Use a demo account. All right, because the more you test it, the more you use these concepts, the more familiar you'll be with them. All right, and it will become second nature. And yeah, once again, I really hope y'all enjoyed this video. If you did, feel free to share and like it. That will be very much appreciated. Until next time, a very cool ICT trading strategy will pop on the screen right now. The silver bullet trading strategy. Feel free to go ahead and check it out. I am sure that you won't regret it. Until next time, I want to wish you all the best and take care.